Thus, for the time being, let's touch upon the stock that you were just talking about, that's Tata Steel. We have Amit Dixit of Edelweiss who joins us to give us his take out there. Hi, Amit. Morning. Thanks so much for joining in. Well, the numbers were disappointing, right, in terms of the Europe business. But a lot of advice is coming in that that dip could get bought into. Would you be advising as well a similar kind of stance, given that the valuation-wise, it's still not very expensive?
Yeah, hi Nigel, good morning. So, one has to see the disappointment in context. So I think the disappointment is mainly because people were expecting Tata Steel Europe to mirror ArcelorMittal's performance, which didn't happen. So the EBITDA per ton at 90, I think consensus was a bit high, quite high, and we were also at a very high level. However, I would say that, standalone performance has been excellent. In fact, the standalone EBITDA, I think, is something that consensus didn't build in. Of course, standalone EBITDA is very similar to what we were expecting. Now, going ahead, I think it is important to look at two aspects. One is that how much of these spot prices have really built into contracts, because if you see the discount between spot prices and their realization, that is almost at $120, while it used to be like historically it has been on an average of average of $200. So positive. So this swing is because the spot prices are yet not built into contracts, and I think the third quarter of the year or Q2 FY22 for us, this should happen, that spot prices also should get reflected in contracts. But we will get more detail from the Tata Steel management on that. And second thing that we need to be very cognizant of, is there any carbon trading this time around, whether there were any purchase of carbon emission. So I think we will have to look in that context, and that clarity we will only get in the con call.
I think that carbon credit issue doesn't, I mean, at least going by what they've mentioned, at least for the past quarter, doesn't appear to be an issue. We'll have to watch out whether or not there were some other one-offs. But Amit, give us two numbers. One, what kind of a debt reduction are you factoring in for this year? That's FY22. And I'm looking at it, and consensus estimates are still at around 54,000 crores odd. Given that they've done 16,000 crores odd, don't you think that's a strong case that that could be revised upwards? So what is your EBITDA that you're estimating for this year?
Sure. So our debt reduction estimate is close to 15,000 crores that we have built in for this particular quarter, this particular year. And I believe that with working capital unlocking happening, working capital accretion typically happens in first quarter when your prices are high. But as, sales volume flow through, you will find this working capital getting unlocked. So that will also contribute to debt reduction. So 15,000 crore is what we have built in. Now, you're absolutely right. I think consensus EBITDA is far behind what actually should be there. So I believe that, in fact, our estimates are to the north of 60,000 crores for the year as far as EBITDA is concerned. But we will take a final call after the con call today.
Okay, we'll leave it there today. Amit, thanks a lot for joining us. Gurmeet, very quickly, your thoughts as well on Tata Steel and any other metal name that you may have looked at?
So Anuj, I continue to be positive. Maybe the best of the returns in the near term could be behind us. As I said, almost 22,000.